Good morning, good afternoon, or good evening, depending on where you are in the world. And welcome to today's SAP Insider 2020 virtual event session. My name is John Froelich from Bramasol, and I will be your presenter and moderator today. In addition to myself, we have Carrie Peterson, Julio Della Costa, and Carlo Maglanao. We have just a few more announcements before we begin. You can participate in the Q&A session by asking questions about the information presented in this webinar at any time. Just type your question into the Q&A box located below the speaker bio on the left, and then click the Submit button. We will respond back to your questions individually after the session. The slides will advance automatically throughout the event. At this time, we recommend you disable your pop-up blockers. You can also download a PDF copy of the presentation by clicking on the resources in the bottom right of the console. If you are experiencing any technical problems, please visit our webinar help guide by clicking on Help ? icon on the bottom right of the console. If slides are not advancing, please press the F5 key on your keyboard to refresh your console. Now on to our presentation, Conserving Cash and Impacting EBITDA with Active Lease Management and SAP CLM. So as I said earlier, we're talking here with my colleagues, Carrie Peterson, Julio Della Costa, and Carlo Maglanao about conserving cash and improving EBITDA through active lease management. For a moment, I want to take a little opportunity to tell and talk about who is Bramasol. SAP founder and majority shareholder. I'm going to cut that out and fix it later. Let's try that again. So who is Bramasol? Bramasol has been around since its founding in about 1996 as one of SAP's premier mid-market solution providers. In 2004, Dr. Hasso Plattner, one of the co-founders of SAP, purchased, or rather acquired, Bramasol. And since then, we have been working very closely with Hasso on a number of different aspects, including the acquisition of a key part of our business, expanding it back shortly in about 9-10 years ago, and then further as we continue to refine our business and focus in on things like SAP Cloud, SAP S/4HANA Cloud, and around our focus on finance. Bramasol has headquarters in California and is a premier SAP services firm. We do digital and business transformation projects and are an SAP Gold partner. We've been around, as I said, almost 25 years, have done 1,000+ projects, have deep expertise with over 200 experts, and are co-innovation partners with SAP. But today we're going to focus on what matters to you today and now. And that's all about what's going on in the marketplace. So during these times of economic disruption, we found through a PwC CFO Pulse survey that, no surprise, 73% of CFOs believe that COVID has the potential for significant impact to our business operations and is causing great concern. And I think we're seeing that happening currently. In addition to their major concerns, they are focused on two major items. Number one is the potential global recession and the impact of that global recession on business. And subsequently, or as an impact to that, 70% of them found that the financial impacts, the effects on results of operations, future periods, liquidity, capital resources, are of huge concern. But where is the focus? The major focus, as we can see from this chart, is now around cost containment and cash. And so what does that mean for us? Well, today we're here because we want to help you focus on understanding how to use active lease management to conserve and manage cash through things such as lease negotiations, impairments, visibility, and then impacting EBITDA through finance versus operating leases and lease outs or subleases of space. So with that, I'm going to talk a little bit about what is SAP Contract and Lease Management. It is SAP's solution for managing all types of lease assets, really focused on both the ASC 842 and IFRS 16. The SAP Contract and Lease Management solution is core and part of SAP Finance, which means that you get all of the benefits of integration. It manages the entire life cycle of leases, which means it does everything from the onboarding of a lease, the management of that lease, and the subsequent termination or end of life of that lease. It is integrated both to the asset accounting part of SAP Finance, as well as is integrated directly into the general ledger, the accounts payable and receivables, controlling and profit center accounting, and reporting. What this means to you is that there's a coordination and collaboration between the lease administrator and the asset accountant to make sure that you have the right proper classifications, valuations, and that everything is happening in accordance with the key regulations. SAP Contract and Lease Management provides a number of different features, including contract management in areas such as subjects of agreements, cost centers, valuations and classifications, and multi-GAAP postings for any kinds of GAAP-related areas, including IFRS, US GAAP, etc. Carlo, can you talk for a minute about some of the areas that you think are most important, and maybe Julio share your perspective as well?
Hey, Jen, sure. A CLM is a flexible tool for any industry that handles their contract of leases in SAP. CLM can do, is flexible enough to do different valuations, whether it's GAAP or IFRS or local GAAP. It can handle scenarios where, especially for IFRS countries, to have foreign currencies. You can have your contract currency, local currency at the legal entity level, and a foreign currency, group currency at the consolidation level. CLM also, as you can see here, is that it integrates both at the AP and AR sides of finance, leasing in and subleasing out, especially for CLM. And it does have different models that it could operate on. CLM can be handled independently as a disconnected system, as a can run your valuations independently. It could fully integrate your finance and controlling modules, and you have the option to run CLM just to integrate with fixed asset or not. And so you have these powerful options that you could run into depending on your business model or your requirement or the situation you're in at this point of your implementation of the compliance. Other, essential things that CLM provides is its strong integration with finance, and this is how it handles the valuation at what we call at the valuation object level. So CLM, being a contract management tool, can have multiple assets in the contract, and we know that each of these assets can have different valuations. CLM does that valuation object level to generate your cash flow and does your reporting in IFRS and GAAP reports.
Awesome, thank you. Julio, as a former controller and an accountant at heart, what is it that you like the most and you think is so powerful about CLM?
Hi, John, so thank you. So yes, Carlo just outlined a number of features, but from my perspective, in addition to those, obviously from the finance side of it, we always value compliance. So I have 1,000 leases in my company. I select a tool that's going to ensure that I'm compliant with the new leasing standards, ASC 842, IFRS 16. However, I think that is just the beginning of the journey. So we've complied, but when you start thinking about the optimization, the transformation, of leasing and asset management, what I am interested in as a controller for any business that I'm responsible for is start looking at payments. How much am I paying these lessors? How much payments do I need? And am I paying the correct amount? Well, what do I mean by that? When I say that is, especially in today's challenging times, it's very important to understand where my payments are going, to who they're going, and is there a way that we can reallocate or optimize that payment process? So I think Carrie's going to talk a little bit about this going forward, but from my perspective is, do we have the right space allocation? Can we reduce it? Are there different ways to do this? Should we buy the asset instead of leasing? So there are a number of activities that are very important from the finance perspective, and compliance to me is just the beginning. And then we start thinking about optimization and transforming those processes to get really what we call, John, insight to action. Thank you.
Absolutely. Thank you, Julio. And I know the other thing that you absolutely love about CLM and some of the other SAP solutions that are integrated is their auditability. So we don't have to waste money on those expensive Big Four auditors, right?
Yes, exactly, John.
So I'm going to turn over to my friend and colleague here, Carrie Peterson, and Carrie's going to walk us through a couple of scenarios that will show how exactly do I save money and how can SAP CLM make it easy for me to save money. So hello, Carrie.
Hi, John. Thank you. Right. Well, remember you started this session out by talking about cash flow. And this scenario is dealing with really paying for what you're not using situation where with so many workers working from home these days, and this trend was happening even before our current health situation, but in the scenario, there's a company that has 100 square feet that they're leasing, and they are now only utilizing 70,000 square feet, and they'd like to renegotiate. So if they didn't have CLM, gathering this information is going to be kind of difficult, but it would be a manual solution, or if they did have a real estate contract solution, but it wasn't integrated with ERP, then there's going to be a lot of manual updates as well, and trying to keep the balance sheet and the change again to their asset, the value of their asset going down from 100 to 70,000. And I'm going to show that with CLM, it really is not only easy to do, because easy is good, but in the background, it's taking care of, again, the value of the right of use assets, it's the payment, your cash flow, what is your depreciation, everything is being captured by the change. So go ahead and we'll just go to the next screen, the next slides. I'll just go into a little bit more detail. So again, the scenario is going from 100,000 square feet to 70, and it would be very manual, or it would be just difficult in a disconnected solution. So we're going to do this in CLM. And I did have the option of doing an interest rate change or a term change. There's a lot of other negotiations you can do versus just square footage. But in this scenario, we're just going to focus on square footage.
Great.
Okay. So these are screenshots from CLM. On the left-hand side, you're seeing something that's called differing measurements. And when you're paying either by, in this case, square footage, or let's say you have a lease of a fleet of vehicles and you're paying the same amount per vehicle, and that number fluctuates, then you would use differing measures for that as well. It's not a set payment, it's a formula. So, and those of you that are using SAP, which I assume most of you are, not all of you, SAP is very date driven. So you're seeing that there was 100,000 square feet that went from March 2019 to April 2020. And then on May 1st, it was determined again that you're only utilizing 70,000 square feet. You renegotiated with your leaseor to restate the lease. So you're seeing that on the top part of the screen here. And then just go ahead and go to the next screen. And the impact then, again, this was automatic. As soon as you changed to 70,000, then CLM handled the adjustment to your payment. So if you're looking at the very bottom of the screen here, it went on May 1st to 140,000. And then it also, on the next screen, you're going to see reevaluated your right of use asset. Now, even if you're not, you don't have to be compliant with ASA 842 currently or in the future. Let's say this is even a lease that didn't fall within those standards. You can, well, we'll just back up. So in this case, it is falling within the ASA 842 requirements. And you can see that at the bottom of the screen, as of May 1st, it went from 24 million on the current value of the lease to 14,840,000.
Yep. And if you didn't have this, you'd have to use all kinds of spreadsheets with net present values and all those terrible things I remember from MBA school.
Exactly. So that was the first scenario. Now we're going to change it up a little bit to where you were able to negotiate and drop the lease down to 70,000, but you actually only need 50,000, but you're not unsure in the future. It might go back up to 70. It could go back up to 100,000. So at this point, it's good to state that, we're just doing a one-time change here, but we really don't know what the future is going to hold. So the trend could be that people are going to go back, into the office, or maybe it's going to be more stay at home, but it could be multiple times a year that you need to make adjustments to your leases. And CLM is going to, again, allow you, it's easy, make the change, and all of the reevaluation, all the adjusting entries are going to happen for you. So in this next scenario where we're going from 100 to 70, we're actually using 50. And what we've decided is on that other 20,000 square feet, we're going to sublease. Remember, we're trying to talk about cash flow here. How can we maximize cash flow? Well, we're able to negotiate those 20,000 square feet to our leasees at $2.50 per square foot instead of the $2 that we're actually paying to our leaseor. So we've got cash flow coming in. So SAP is going to handle the visibility, not only the payments, because again, this is fully integrated with ARAP. So you're now going to be able to see that income, that cash flow coming in, that's tied to your original contract property that you're leasing. And John, if you just go to the next screen, we're going to be able to see that here. So the very middle of the screenshot, you're seeing the main contract is contract 20. You've got your payments going out of 200,000 that then dropped on May 1st to 140,000. And then you're seeing in May that's when we actually are bringing in tenants and that we've got a $25,000 cash inflow.
Well, that's fantastic. I know, Julio, you as a controller would love to see more cash coming in. But what is it, you look at this and, tell me what excites you about that.
Well, for me, John, I mean, I think, like I was talking about before, if you think about what we've seen, so we've seen, the software can obviously help you comply, but when you start looking at this information, these data points, and you have your lease in, lease out cash flow, you start analyzing at that level, and that is really helping you make better decisions as a controller, a CFO of an organization. You start having this visibility to all your outgoing payments, and that helps you to say, okay, maybe I need to manage my cash better. This is an avenue to say, I can look at my future cash flow for the next 3 years or for the length of that lease, and then I can start thinking about, can I modify this? Do I need to modify this? And even a more serious question in today's economy, can I even afford to pay this? And if the question is no, I have to start making decisions today. Maybe I talk to my landlord, I talk to who I have the lease with, and that will help me start those conversations by having that information at my fingertips.
Right, and it's fully integrated, which is a fantastic thing.
Mm-hmm.
Carlo,
And
Carrie,
John,
go ahead.
don't forget about your fully integrated talk track is exactly correct, because remember, when you push this information into working capital management, you have that visibility. You start adding all your payments with your accounts receivable, with your accounts payable, and guess what? You have a current ratio visibility as well. That's going to enhance my future decision making as well.
Right, no, absolutely. And the other one is, you think of the complications, and I'll ask Carlo a little bit about some of this as well. I think of this, and I always go back to common area maintenance. Now that I've renegotiated and I'm subletting, how am I reallocating common area maintenance? And of course, CLM, REFX/CLM does that automatically. But Carlo, there are a whole bunch of other features that you can play with as well, such as interest rates, free rent. What other aspects, are in there that you can adjust to help your cash flow like this?
Yeah, so this is by far, one of the more powerful aspects of CLM, because CLM can do your modifications in whatever ways, whether you're changing your rent amount, you're changing the measurement, and that's the basis for your rent. If you're changing the interest that you use for valuation, if you have rent holidays, once you set this up in CLM, CLM allows you to make these changes, which is a very critical function for any CLM tool, especially nowadays that, with all this market conditions are, pressing companies to make adjustments to their contracts, renegotiating their contracts. And this is I would think, a very critical tool, because what I've seen in the other tools that we have in the market is that the difficulty or the inability to do these modifications in different scenarios. Right. CLM does this at different levels. Like I said earlier, is that in a contract you can have multiple assets in a contract, multiple valuation rules in a contract. It does this function to generate cash flow and make these changes within CLM at different levels of changes.
Sure, and I know you noted earlier, but it also is, because it's automatically integrated into Treasury, SAP Treasury, for example. You can pull automated interest rates that are tied to CPIs or tied to LIBOR or EBIBOR or any of those tools that are in there. You can look at different currency fluctuation rates that you might pull out of Reuters or Bloomberg, and they're fed automatically and they sync up so that you're not having to do a whole bunch of reconciliations at the end of the day, not only saving yourself some money on reconciliation software, but saving yourself time and effort and focusing on audits. Absolutely.
That is correct. That's that's another beautiful tool in CLM. You can do mass changes with negotiated rates for a specific area. You could do a mass change on hundreds of contracts, thousands of contracts, by just doing a selection by a type of a contract or by business partner, reducing or increasing. You can do that en masse, and you don't have to do it one by one. There's a facility to do that in CLM, to do a mass change, and you could also base that on indicated CPI indexes, and this CPI index is maintained could be interfaced with some market data, and what you've indicated as well, interest rates. We've seen from different clients is that they could have different interest rates by region, different interest rates by asset, and these are facilities that are provided by CLM that you can define yourself.
Yeah, no, that's great. All right, so how else can I save cash? Well, we always talk about these as don't pay for what you don't use. So we thought we'd go into a scenario here where you're currently using a forklift in the warehouse and it's damaged beyond repair because it was picking up shipping crates of toilet paper, which just doesn't seem to be in abundance right now. So Carrie, why don't you take us down that path?
The first time I've used a scenario that had toilet paper in it.
I know.
It seems applicable.
Doesn't
All
it?
right. Sad but true. So exactly. So what you're seeing here is that, as Carlos talked about, the different conditions that you have. So we had a condition on basic rent. And then we added a one-time casualty condition that says, and this was written in the contract, that if there is a casualty to the asset, then there's a one-time payment of $5,000. So you're seeing in this screen, you're seeing the termination of the contract at the end of June. The contract also had a stipulation that if you're going to terminate early for any reason, that you had to give a 2-month notice or continue making payments for 2 months beyond the notice. So even though this casualty of the toilet paper or the forklift happened in end of April, we're going to go ahead and pay for that asset until the end of June, and then the $5,000 payment. So that's handled on the top part. And then the next slide, we're going to blow out the schedule. So based on making that change in CLM, what you're seeing in the bottom part of the screen here is that the asset is fully depreciated down to 0 at the end of June. So all of the accounting postings that have to happen because of this casualty happen automatically within CLM. So Julio, I'm sure you have something to add to that.
Yeah, so when we have an impairment, let's just take it from an accounting perspective under the new guidance. So we're going along, we have a payment that we've logged in for the lease, for the length of the lease. Now, according to John's lovely example, the forklift has been impaired. It ran over too many toilet paper crates or something. So therefore, what we have to do now from a CLM perspective is we have to modify it. And as Carlo correctly pointed out previously, the beauty of this system is, guess what? I can do that automatically. I just have to give the system the modification date. And for an accountant's point of view, the good thing is that I get the true-up entries in the system. So just imagine if I had to do this in Excel, Carrie, I would have to say, okay, here's what I booked so far. Here's my modification. Here's what I have to revalue my asset and do the change, and then do a difference between old and new and book the difference. What I just love about this is that it's saving me hours and hours of time and calculation by giving me the entries automatically. I mean, I can't stress enough the power of doing an automatic true-up adjustment, because as we accountants know, it takes forever to do that, and we're not even sure if it's correct in Excel. Gary?
Right. Well, let me comment on that. So Julio, real quick, all of us were on a call earlier today with a large utility company, and it's interesting when you're talking about assets that you're paying $1,000, $2,000 a month on. But Julio, you come out of the oil industry where some of this equipment is tens of thousands, if not millions of dollars in value, and they can get impaired. Or Carlo, it could be land or assets on that land from a power generation perspective, and the ability to make these modifications and changes is impactful.
And I'll add to that is, this was a full write-off, but there are impairments that, I mean, it could be just that the life of the asset has been, cut in half based on an impairment, or it's a percentage of a write-off, so which even gets more complicated. And again, then CLM just handles that.
Spot on.
Spot on, yep. Thanks.
And actually, and John, if I could just say,
Yep.
CLM not only handles the write-off, but as we all know in the accounting world, when you do a write-off, you have to take the net book value of the asset, you take the residual value you get, or the selling or the sales value you got for the remainder of the asset, and then you have to calculate a gain or loss on sale. And the beauty of this again is CLM is calculating that gain or loss on impairment write-off for you automatically.
Yeah.
It's really a very nice feature.
Yeah. Speaking of nice features, I know something that you and I have been talking about, and we talk about all the time, is this concept of insight to action. Talk a little bit, and why don't you walk us through some of the aspects of visibility And what is it that CLM gives you visibility into, and how it can impact what you do on a daily basis as a controller?
Yeah. So very important, John. So with the passage of ASC 842, so ASC 842 actually changed the way that finance leases and operating leases are accounted for. So when you talk about the impact to EBITDA, when you have a finance lease, you're required to isolate your interest expense and your amortization or depreciation expense separately. So imagine you're calculating your EBITDA with a finance lease. So with the finance lease, if you just transformed it under ASC 842, you are actually going to have a higher EBITDA, because the definition of EBITDA is earnings before interest. So we have an interest component in a finance lease, taxes, depreciation, and amortization. Depreciation, we just said there's a depreciation component. So basically, when you're reporting EBITDA to your investors, to Wall Street, or whoever, you're actually getting a benefit from this because you're removing the interest and the depreciation. Compare that to an operating lease under ASC 842. Operating lease is an operating expense. EBITDA actually includes operating expense. So, we've seen some scenarios where there has been some movement of the assessment of whether a lease is truly a finance lease or an operating lease, because we've seen some companies move towards having a finance lease. I would just recommend to the audience that there are 4 steps to having a finance lease. I am an accountant. I see things black or white, so I would follow the guidelines.
Absolutely, absolutely.
From a visibility into leases by vendor, if you think about so we were just talking about this today, using CLM as a repository for all data relating to leases, land assets, land leases, easements, right of way. You see what happens when you have that visibility. And Carrie's going to show us a little bit, some of the cool features of the analytical piece of this. But it really gives you the ability as a controller, an accounting manager, or anybody who is responsible for your lease portfolio to really understand what is driving these costs and expenses. So the first one here is, if I have a significant amount of leases with one landlord, it just goes without saying that I should be in a better position to negotiate a better rate. You actually see that happening today. And today, with the economy the way it is, you find these big stores like Cheesecake Factory, who has 50,000 leases all over the United States in these mall locations. Malls are owned by a small handful of large corporations. You find these retail stores and these restaurant stores, they're going back to these mall owners and saying, you know what, I have 1,000 spaces with you. I'm paying you $100 a square foot. For me to continue paying, how about I reduce that to $75 a square foot? So you have that leverage. The better you have, the more leases you have with one vendor. And then, as it says on the screen here, as you go and you start looking at, is there a way to consolidate my rate? Is there a way to negotiate to get better ways of paying less, or maybe spreading it out? Instead of saying, I'm going to pay you $500 for 12 months, maybe I pay you $200 for 24 months. So there's all types of leverage options you have when you have a significant amount of leases with one vendor. When we talk about international, as we look at ASC 842 IFRS 16, we know that your IBR has to vary by geography. So let's say you're paying 10% in Argentina on your interest rate on leases, whereas here in the US or North America and Canada, you're paying 4%. Well, we ask that question, do I really have to locate my operations in Argentina? Is there a specific geographic region, or was just because it was a cheaper form of economy at that time? So it gives you the visibility to say, hey, you know what? I'm paying 4% in US, 8% in Argentina. Let's see what we can do to maybe move some operations back to the US. And the last one is the beauty of CLM is once you adopt the standard, you have to present value your future payments. By present valuing your future payments, what you're actually doing is you're creating a forecasting schedule of all the payments I have to make for the length of the lease. So by its definition, it's giving me forecasting information. So for instance, if I have a lease that's 3 years, and then at the end of the lease, I have a balloon payment of 10 times the lease amount. Well, I can see that from today's value, and instead of saying, okay, I am going to talk to my landlord to reduce that balloon payment. Otherwise, there's a real possibility I may have to default on my lease. So as a landlord, I may be more flexible to deal with you rather than you just default on the lease. So I think, John, all these are really giving us visibility. They're giving us more ways of transparency, of seeing where the leases end. And then more importantly, from my perspective, is what can we do about it?
Right. Thank you. So Carrie, why don't you take us through?
All right. Well, as you're seeing here, it's a 360 view of contract cash flow with SAP, REFX, and CLM. What you're seeing here are, Fiori tiles. Because we've already talked about the fact that CLM it's just an SAP solution, it's fully integrated, then it's going to be able to leverage the analytics that are inherent with S4. So accounts payable, accounts receivable, and then I'm going to focus in on, you can just go ahead and go to the next slide, the KPI tile there on invoicing processing. So Julio's mentioned insight to action, I think John did as well. I had set up some thresholds that if I put a warning sign, which is the yellow, or if our invoices or our payments exceeded a certain level, then that to show in red. So without even going anywhere else beyond my homepage, I see that I have some issues with my invoices. And again, your leases, are your invoices. So the next slide is showing that if I select just that tile, that KPI, the insight to action, the next few slides you're going to see are the information that I'm able to get to just again from my homepage within SAP because of the integration, the fact that CLM is integrated. So what we're looking at here is that yes, I was trending pretty well as far as number of contracts or number of invoices in this case, and what my monthly spend was. And all of a sudden, April, there was this huge spike, and thus the red, warning that I got with my KPI. The story is that we had a number of renewals that happened with our contracts in April that if we would be aware of those with the notifications within CLM, but for the scenario is, okay, they all were renewed and there was a huge uptake in the payments as well. So I can continue to click on or navigate to other areas from this particular chart. So John, let's go to the next slide. And that was looking at all leasors or all partners or suppliers. So I'm able to then break that down to, well, show me all of my business partners, show me all of my leasors, what are my payments, what number, how many contracts, do I have? Again, we're talking about CLM here, so they'd be contracts. How many contracts do I have out there that are generating these invoices? And I can see that I have one major leasor. So we are speaking about, controlling cash flow, reducing spend. This is an area that I would tend to focus on first. Let's see, as John had said with the Cheesecake Factory, or that was Julio, is, I'm probably in a position to go and renegotiate just by, again, having this information that I'm seeing with SAP. That's one angle. Like another angle is the leasors. John, just go back one more, thanks. Is that the leasors that maybe I don't have as many contracts with. You're going to see that I'm able to go into actual individual contracts, as maybe I am getting better rates with those other leasors, and I renegotiate with them instead of the one that I have all my contracts with. So it depends on having the information and then being able to do something with that. So what John was showing you on the next slide is that directly from that screen, I'm able to go into now, what is the total cash position for this specific supplier and leasor. So I've got, inflows and outflows. There's again, we're seeing, and I know Julio, you had talked about, I think the cash position. So again, by having your contracts in CLM and in SAP, this is giving us our cash position here for this specific leasor. And then one step further is I can actually drill into the contracts themselves on the left-hand side. What was making up that, the outpayments were all of the contracts that you're seeing on the left. And I can even from there go into, since we're talking about cash position, I can go from there, and then the next slide is showing into the very bottom here is into the bank account itself. So I know I kind of transition into treasury a little bit, but since cash is king, I can't really avoid that. But Julio, you want to expand on that?
Well, actually, Carrie, that's the whole point, right? The whole point, and I think the beauty of using software such as SAP, where it's all integrated, this exactly is the first part of your treasury discussion, because this now throws over into cash forecasting, cash planning, as they say, and basically it's going to be one of your inputs into your cash flow forecast. A very big input, that is. So yeah,
Absolutely.
it all, in fact, I love that name, Carrie, 360-degree view, because that's exactly what it is. It's giving me a view of the leasing, which now takes me into treasury, which now makes me be able to make capital and spend decisions more efficiently, and more importantly, more quickly.
Great.
John?
And then Julio, I know I went through it pretty fast when I was talking about renegotiating. You mentioned this before, but you might want to just repeat the fact that, how you can do mass updates within CLM.
Oh yeah, so from a system perspective, the idea of doing mass updates is very helpful to anybody who is tasked with the management of a lease portfolio. So from whether it be the real estate department, the lease department, or somebody in the back office in the accounting department, if you're managing a portfolio, there's a good rule of thumb. Anything over 100 leases is probably too many for an Excel spreadsheet. So if you have anything above 100 leases and you have modifications, and guess what? These modifications are happening every month or every week. And imagine trying to keep track of all these changes within some type of notepad or Excel spreadsheet. So, but let me bring in my colleague Carlo, because he's going to explain to the audience here about the system ramifications of these mass modifications. Carlo?
Well, that's a very good point, Julio. And in fact, we have a client that had this issue about how they would do mass modifications on how they would evaluate their existing contracts, because as per the new guidelines, you could clarify that, Julio, is that for GAAP, the adoption has been extended to another year. And some of these clients have been working on migrating contracts to their system, but they have done their initial evaluation, but would elect to take on this new guideline on extend the adoption dates, and that is pretty fine with CLM, because what CLM does is that you can do this stuff in CLM. You have the facility to do mass changes on your valuation rules. Valuation rules meaning your GAAP valuation rule, the dates that you have, the start of consideration dates that you have in your valuations, and if necessary, changing the interest rates on the valuation rules. And what you do is then you do an updated revaluation of the contract. And that's a powerful facility because in this particular client is having about tens of thousands of contracts. So you're spot on. It's a very important function that you need to have in your system in order for you to adopt to the changing either policy or business scenarios.
And I think actually, John, if I could just spend 45 seconds, because Carlo raised a very good point and a real situation that we are encountering today, which is we all know because of the COVID-19, the FASB has deferred the leasing adoption for private companies, ASC 842 in the US. So what does that mean? That means, and Carlo's point is exactly correct, we have a customer right now, a real customer, tens of thousands of contracts, who wants to change because of the delay their fiscal year adoption from 2020 to 2021, which is perfectly allowed. But as we know, and Carrie showed earlier, to change to adopt ASC 842, you have to take your future payments and present value it back. So for that customer, they move those leases forward by 1 year. Well, in 1 year, you're going to have some leases fall off. You're going to have new leases that need to be revalued. And if you think about it, if I'm taking my future payments, in 1 year, I have 12 less future payments. So guess what? I have to actually revalue that entire contract. It is a lot of work, John. So anybody out there who's thinking about doing it, give us a call. CLM is an excellent tool to do that for you.
Absolutely, absolutely. And the other thing that occurred to me, Julio, as you were talking earlier about balloon payments, is we talked in a recent webinar about exposure management and risk, and being able to have a linked system into your treasury systems, into your cash management, gives you visibility into the potential for the need for cash in the near future and what your exposures and potential risks are. So yeah. All right, well, thank you all. So what exactly did we see here? We heard about CFOs are focused on, and most companies are focused on the impacts to financials from COVID. They're focused heavily, over 70% of them are focused on cost containment, which means really getting in there and understanding how do I maximize value, reduce my costs. We saw specific scenarios around that, such as the ability to reduce space, the ability to go after impairments and casualties, et cetera. And a lot of them are preparing to emerge from the current situation. And that's where I think there's an opportunity here for companies to really sit back and not just comply, not just manage, but really do what Julio said, and we've been talking about, which is optimize and transform. Turn this compliance into a competitive advantage. Have the visibility that you've gotten to allow you to emerge from this situation that much stronger than you were when you went in. We talked a bit about conserving and managing cash, focused on lease renegotiations. We talked about impairments, and then just as, if not more importantly, Julio's and my favorite expression is insight to action, but really taking and looking at visibility and looking at what are the numbers and what are the trends indicating, and how can you take action against those to provide better return for your business. We talked a little bit about the impacts to EBITDA and what happens in a finance versus operating leases. And of course, we want to be careful and follow the guidelines, but at the same time, if the street is asking us for improved EBITDA, we need a great way to be able to understand, are we classifying these leases properly so that we get those correct calculations. And finally, we talked about lease out or subleases, which is a great opportunity for you to impact earnings, right? So what you've done is lower costs, brought in some more money, and impacted those. So what are the key takeaways? Again, as I said, everyone is looking at ways to conserve cash. 3/4 of CFOs want to lower costs. SAP CLM with active lease management. What do we mean by active lease management? It's not just putting it in and using the system to manage your leases, but really to go in and use the tools available to you, whether it's the insight to action tools through visibility, the Fiori tiles to drive KPIs, the proactive use of the data that exists, the embedded workflows and alerts to ensure that you're not paying for things that you aren't using anymore, or you can look at the workflows to allow you to reduce the cost of penalties. Some law includes things like impairments and casualties, really getting a handle on that. Impacts to your banking or lessors via consolidation. Julio talked earlier and Carrie showed us how through our analytics, we can see the total number of lessors and who the largest majority are, and can we negotiate better rates? And then when you negotiate those better rates, it's so easy to go into CLM and fix it and update it so it does the automated, not only the automated revaluations, but automates and updates all of your cash flows. We talked about the power of visibility to provide insight to action. I'm going to talk for a moment about Bramasol. Bramasol has a low-cost, rapid implementation program. If you're a net new CLM customer and you want to get on CLM, or if you're using a third-party solution and have been convinced by any of our other webinars or even this one, that now is the time to move from a third-party solution that's disconnected, may not have the total functionality of CLM, to SAP CLM. We have a rapid implementation program that can get you there in about 6 to 8 weeks for a cost that I think you folks will find really great. So with that, I'm going to start wrapping up. And as we wrap up our session, please let us know if you have any questions by sharing them again in the Q&A module on your screen. Just type your question into the text box, then click Submit Question button. A team member will follow up with you soon. My team and I will be presenting live at the SAP Insider Event 2020 in beautiful Austin, Texas, August 11 to 13. And we hope to see you there. Please stop by the booth. We'd love to give you a detailed demo on CLM. We want to thank you for attending our virtual session. On behalf of myself, my team, and SAP Insider, thank you for your time and make it a great day. All right, everybody. We did well. Thank you all. How'd you feel?
Good.
Good, cool.
That was a great webinar, man. I mean, that was awesome. Are we going to do that same thing in May then, John? Is that the same thing we have?
No, we're done with these two, but we can do
No,
more
no, no.
just like this.
We have a webinar in May 21st about leasing.
Yes.
This is the same
So
topic,
we're going to do something similar. So, and of course, this is being recorded, but I'll cut it out.
Oh,
we are
sorry.
going to do something. No, that's all right. We're going to do something very similar in May with these similar topics. So what I'd ask Carrie, Carlo, Julio, for you guys to go away, think about what we did today. Are there some areas you think would be better to focus on? And what we really want to do, Carlo and Carrie, in the next one is dive into the actual live system. So when we do the actual webinar, we're going to dive into it. We want to use the system. We want to show the power of the system. So what we may want to do is maybe narrow down, or Carrie, what we may start with is maybe we start with the insight to action and the Fiori tiles, and then we dive into some of these other aspects. So I'd like to see if we can do that. All right?
All right. Sounds good.
Yeah.
Awesome. I will set up a meeting shortly for us to kind of get on the same page. But thanks to all three of you. It is awesome to work with all of you. And I feel fortunate that we have such a great team. And Carlo, we are going to have to do some real estate stuff because you got the shiz on the real estate for sure.
Yeah.
All right.
Sure, man.
All right,
Yeah.
guys. All right.
All
Go
right.
have a beer.
Bye,
Have a great
everybody.
day.
Thank you. Have a good night.
I know that Julio's going for the bourbon. I can see it.
Yes.
All right,
Thank you
everybody.
very
Have a
much.
good one.
All right. Okay.
Bye.